Hey folks, it's Simon here with your Tao Daily for market close Friday, August the 1st, 2025. Stocks had a pretty weak session on Friday. The S&P down 1.64%, NASDAQ down around 2%, ostensibly on the back of weaker than expected labour market data. So non-farm payrolls for July was disappointing, and then we saw pretty substantial downward revisions for May and June as well. In true Trumpian fashion, the president sacked the head of the BLS for allegedly rigging the data. But to put the data in context, we had Liberation Day back here on the 2nd of April, and that was the famous Rose Garden speech where Trump threw very high, quote-unquote, reciprocal tariffs on 150 different nations. You can just imagine that that would have caused a fair amount of confusion, consternation, and more conservative behaviour from the private sector in terms of hiring. So we could definitely have seen some impact there on payroll numbers for May and June in the wake of that Liberation Day surprise. Nothing changes sentiment like price. After Friday's session, everyone's bearish now. We need to see what happens with this retest of this previous all-time high. We broke above this and never looked back. Now, normally if you break a level, a trend line, or a level of support and resistance, you'll see a retest of that level just to make sure that break is good. So if we come back and retest that level and then rally on, that would save the market from a near-term slide. Now, if we get back down this level and slice through it, of course, further downside risk becomes more likely, and that's when we can start potentially targeting the 200 SMA. But right now, what I'm looking for is potential support at the previous high. That coincides roughly with the 50-day simple moving average as well. Big test coming up there. If we look at the NASDAQ, story is exactly the same. Big test coming. Previous all-time high should act as support. 50 SMA come into play as well. The question I want answered is how do markets respond when they get back to this level? Do they hold support? Do they slice through it? We'll probably know the answer to that by the end of the week. Now, that weak payrolls data caused a big slide in the dollar. It also caused a decent surge in bonds. You see TLT was up 1%. If you look at 10-year bond yields, they plunged lower to 4.22. If the dollar is resuming its weakening trend and if yields are inclined to plunge even lower, this is probably going to be supportive for gold, which is looking a little bit weak last week. It's regaining some of its structure on Friday. So those are the key things I'm watching this week. I hope it helps, and I'll catch you next time.